Incoming huge market volatility with US elections coming up. How are the markets going to react? Let's break everything down. Hey, baby, happy Sunday. I hope we are all well and truly lit. Yes, we are back with another week in these beautiful markets. Guys, before I get this rundown, obviously, I'm going to address the elephant in the room. See, as you can see, big shiner there, black eye. I play football on a Saturday and I went up for a challenge, and obviously, someone's felt the need to cheat, got a bit of an elbow in the eye. Is what it is. It's not going to stop the energy, and stop us from tackling these markets this week. Excuse the pun. Anyway, look, that aside, this is a massive, massive week in the financial markets. You guys know why, okay? Because it's US presidential election week, right? This is the biggest event now of the year. Obviously, things are very close in terms of what we're going to see in terms of the outcome. Markets are favoring a Donald Trump, it seems. Obviously, we've had this big push to the upside, and part of this push to the upside has also been the Trump trade. You know, the Trump trade, as the saying goes. Now, see this election between Republicans, Donald Trump, and Democrats, Kamala Harris. So let's just put it into a quick nutshell for you. Guys, you see all this information that I'm putting into this video, it just comes like that, right? It's second nature to me. And the reason being is because obviously I have that experience. Nothing beats experience in these markets. Everything that I have learned, I've been able to simplify, because a lot of information that's out there in the public domain is extremely overcomplicated and a lot of jargon, and it doesn't make it easy for the everyday person, everyday trader trying to learn macros, understand, why is the price has spiked here because of this fundamental reason. I don't understand it because all this information is over, complicated. But for me, all these years, I've been able to simplify it, make it easy and digestible and actionable for the everyday trader. And that's exactly what I've been able to do. And I've put together in my fundamental bootcamp course, which you can obviously check out if you're willing and keen to really level up your whole game. You can thank me later on that. Anyway, let's continue with the video. In terms of the scenario, it would be a dollar positive if Trump does come out and win the election. See, we want things to be clear as possible. We want, as much as a clear victory as possible for Trump, to see that dollar pressure resume. Obviously, it's somewhat priced in terms of that, but there's still room for the dollar to continue to push the upside, at least be influenced, we've got all these influences, right? All these macro themes, which we've been going over for weeks now. And as I said in my last video, right, all those factors that are supporting the dollar on a macro level right now. And this will be a continued one. Okay, because it's not just instant reaction, Trump wins. No, it's when these policies start being implemented as well, and markets start to factor and price these in, because his policies are seen as inflationary. Why is that dollar positive? Because effectively it will halt the FOMC or really slow the hell down in terms of their rate cutting cycle, right? Obviously, they've started their rate cutting with that 50 basis points one, which we're not going to go into, but they just shouldn't have done it anyway. But it will slow the FOMC down from their rate cutting cycle, because if, for example, he starts cutting taxes, what do you think people are going to start doing? They're going to go and spend and stimulate the economy, and that keeps prices sticky. The other key thing as well is tariffs. Trump trade wars, which we had before, where we had China and US going back and forth. Trump wants more trade tariffs in place, which will make goods more expensive in the United States. And obviously the businesses that are offering these goods and services, so on and so forth, obviously goods, will be putting up their prices. And then, of course, that's inflationary, right? So Trump is seen as dollar positive because it'll slow down rate cuts. Remember, when we're cutting rates anyways, it's seen as a negative for a currency. But if we're going to keep them higher for longer, so we're going to get more flows coming in, yield hunters, all of that, seeking higher yields. So just quickly, just looking at the dollar here, right? I'm going to recap. I just want to quickly recap last week because people may be confused, by the non-farm payrolls reading. People are, oh, that can't be right. Well, it was right. And one of the key reasons, let me just pull this up here. This is a big week, guys. There's so many key data points. Anyway, if we just quickly recap on last week, it was the non-farm payrolls. Only 12,000 jobs were added to the economy. Unemployment rate remained steady, which is good. Average hourly earning bullish 0.4%. So that's still inflationary, right? People still getting paid decent wage. This is what I mean. I said it, I stressed it last week, right? Why the dollar can continue to push to the upside. Obviously, albeit we'll have little bits of volatility where dips, we see technical pullbacks. That is it. It's not fucking end of the dollar rally. It's not fucking technicals leading the way in terms of fundamental, and then fundamentals follow. No, the macros are there. We will have periods where we have little pullbacks, profit taking, because we can't just move in one direction. Just always note that. I know people are quick, like where the dollar was heading to the downside initially last week. You got to remember we've got the volatility as well of the US elections. Okay, so there's a lot of things, but everything still points in favor of dollar bulls right now. Everything's still on a macro level supportive of that. Look at all that data last week. Generally speaking, is bullish, right? Generally speaking, bullish. Pending home sales is strong. We've still got people buying homes, buy home sales there. Great. 7.4% smashed expectations are much higher than the previous. The consumer is confident. Look at them. They're confident, the consumer. House price index. Houses are still sticky. Like the price is still not as falling as much as what people were expecting. House price index, 5.2%. Everything still points to a robust economy. Okay, it really does, guys. It really does. In terms of this non-farm payrolls number, it's basically due to the volatility of, the effect of the hurricanes, and also so there are some strikes, the strikes that are occurring at the ports, so on and so forth. So the BLS, the government, the Bureau of Labor Statistics, just said that they, given those factors, it's uncertain as to what the true numbers are. So they're just taking it with a pinch of salt. And markets obviously running with, at the end of the day, strong, bullish average hourly earnings and bullish, unemployment rate remaining steady at 4.1%. Now, let's just jump onto the dollar a minute. So that's obviously what you're all here for. You want to understand where we're going to be going this week. Now, obviously, the dollar index is at a heavy area of supply heading into that mid 104 region, right? 104.50. You guys can see that there. Okay, we haven't been above this since here, early part of July, mid-July, early July. And it looks like we are setting up for a potential breakthrough. Okay, you could almost obviously at this video, you would have seen I had this marked up. A potential inverse head and shoulders, little left shoulder there, big head, little right shoulder. And we had this bullish flag forming there. Nice big breakout to the upside. Why the hell not dollar? Of course. Go for it, dollar bulls. It makes sense. We've got this massive pole of part of this, what could be a huge flag. We finally got this period of consolidation, which we needed to see. Guys, we're fucking one directional. Look, bam, 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 bam. And then we needed that. We need that period of consolidation. We need that profit taking. Markets are trying to position heading into this freaking week. It's big. It's elections week, man. So you could view this as a big potential inverse head and shoulders, the left shoulder here, the right shoulder say, and this bullish flag. Either way, right? We get this outcome from potentially for Donald Trump. It's going to be dollar positive regardless, okay? Regardless of what's priced in, all that and the other, there's still room there because it can go either way. So there could be still a relief rally for the dollar. And as markets start positioning for those policies, because Trump will want to move quickly as well. And there's no reason as to why we can't push quickly in towards the mid 105 region. Now, obviously, this week after the elections, the FOMC are going to be viewing that. They're going to be viewing elections come Wednesday with FOMC rate decision on Thursday. It's usually on a Wednesday. Come the FOMC rate decision, I think that's just because obviously they're going to observe the elections and all that. It's just planning around that. On the back of that, this could change. Markets are pricing in 25 base points. I think in my opinion, it's the dollar really has some ground here to push north, the hell north, has some ground because we've 100% priced in. If you look at the CME pricing, we've 100% priced in. Look at that, more or less 100% priced in, 25 base point cut. We know that they're going to be cutting by 50 base points. So what else can they do that's really going to be dovish? I don't think much. Okay. I think regarding the outlook as well, that's where you'd want to be seeing something potentially dovish to really follow up on if they cut rates by 25 base point and you want more dollar weakness, you want to look at the state of the outlook from them. And for me, the outlook is gradual. They're going to emphasize gradual because inflation's still sticky. The economy's still fucking warm. Can't stress that enough. I'm sorry, I know I'm dropping F-bombs, but the economy's still warm. So calm down with your rate cut pricing. That's what they're going to say. They're going to make that clear. They have to. I must be living in another whole other dimension if that's not the case. So I think the risks are to the upside for the dollar. Risks are to the downside for the dollar's pairs. The peers, the euro dollar, GU, Aussie, NZD. I think the risks are to the downside for those. Okay, I'd like to see this really extending to the upside this week, in my opinion. So US elections, obviously the key thing there for the dollar. After the US elections, markets are going to be observing they're going to be observing after the elections, going to be observing FOMC. And obviously outside of that, guys, the events this week is just crazy. Like when you look here, just go all major events. We've got Bank of England rates. You've got RBA rates in Australia. Got New Zealand labour market data, CAD labour market data. All of that we'll get into in a moment. But it's just a heavy week filled with plenty of freaking volatility, which I love. Anyway, let's look at the next event now, which is GU, and start seeing how we're shaping up for some trade ideas as well this week. Guys, as I always say, this is just scratching the surface of the value that we put out on a daily basis, tying in those key macro talking points, whether it's economic data, economic news, economic themes, everything that's underlying and driving the prices of the assets that we're trading. We cover that via the TFTC premium, putting together the macros with the technicals, going hand in hand and finding obviously those trade opportunities on the charts. And obviously, if you want this level of knowledge, of thinking, you can check out, if you wish, okay, you can check out the fundamental bootcamp course. Again, the link is in the description below. Otherwise, continue to enjoy these free videos that I put out from time to time. Do me a favor, if you enjoyed that video, smash up the subscribe button, hit that like button as well, drop a comment below, stay lit, stay blessed, let's get it.